Thursday, December 21, market analysis, Stan Ehrlich, and boy, did we have a day yesterday. Well, looks like that Santa Claus rally dip I was expecting days ago, actually a week or two ago, has started yesterday, a little late. We bought our first Santa Claus rally position yesterday, and we did buy another one with the strategy today, and there's another one to come tomorrow. We're going to hold these S&P 500 long positions until the first, second, and third trading day of January and sell out on one unit of total of 3 on the first trading day, second trading day, and third trading day of January. Or, and I'll explain later, we could use a trailing stop to protect ourselves if the market goes in the wrong direction. But right now, let's discuss what happened. Yesterday, we had a very good steady market early, and I'll get to the 1-minute charts in a minute. And if you guys want any information, you want me to analyze a particular symbol, you want some questions answered, email me, info@ERSignals.com. It's me. All right. Yesterday, we started out on the steady to firm side. This is the March E-mini futures contract. And of course, that was the day before afternoon and popped into new high ground. But the other indexes with the regular trading hours, traditional old-fashioned trading hours, that would be 6:30 California time to 1 o'clock California time PM, also rallied above the previous rally high of the trend, which was the previous day in most cases. And then everything fell apart. About halfway through the day, we started dropping like a rock, and we ended up wiping out the past 4 days of previous lows and the last 5 days of previous closing prices to close below those price levels. Whopping big bearish engulfing in overbought condition, ER sell signal, similar in many respects to what happened on July 27th. Now, I am in no way, shape, or form expecting the market to come down as much as it did from July 27th of 23 all the way down to the October lows. Again, October 27th in this case of this year. Last year was October 13th, and we got a buy signal smack dab on the bottom of the market. Okay, so I'm only looking for a minor downside correction, something more similar to this, but not lasting that long. I really don't want anything more than a few days, because during the time frame between Christmas and New Year's, those 4 days, that'll be next week's Tuesday, Wednesday, Thursday, and Friday, we just sit on the trade. Traditionally, the positions don't have any protective stops. I don't like that. I don't agree with that. And I think everybody should have a protective stop or stop loss order in whenever they have money at risk. So we talked about it yesterday while I was recording this YouTube. We'll get to that in a minute. Bearish engulfing sell signal, we're supposed to be going down. But I also wanted to get an ER3 trade-off, meaning a rally into around the middle of yesterday's range. And guess what? We rallied into the middle of yesterday's range in the first few minutes of this morning. It didn't last long, and we started to drop. Right now, we are pretty close to low and last on most of the other indexes that have the traditional trading hours, and we'll get to that in a second. This opening and low on the March E-mini was, again, late yesterday afternoon through the night, and then the rally, we got short, and then it dropped off. We're short ER1 yesterday, the day of the signal, at approximately 47.84, and almost exactly the same price, 47.85.09. We are short for our ER3, both at this point using the ERSignals strategy. Totally automated, NinjaTrader, and trade station. Okay, so far so good. Let's look at the details here on the other charts. Here we have the March futures contract E-mini, and you'll see that today or yesterday afternoon it was slightly higher on the opening and then rallied very, very slowly during the night, started dropping off at 2 a.m. California time until 5:30 when there was some sort of announcement. Remember, I'm not a fundamentalist. I'm a technician, chartist. So I'm assuming there was some sort of Fed government economic number that caused the rally, which is all gone. The market has now come all the way back down to those levels and a little lower at this tick. That rally provided our new short fill for ER3s this morning, California time, regular trading hours. We got short the other indexes. Let's look at another one. This is the spider, regular trading hours, rallied up, got short. Actually, we're short at 471.68, 469.33 at the moment. Protective stop 475.91 will be moving down if it hasn't already started to do so, because our automated trading system follows not only price, the way it moves, but a variety of other indicators to move that stop. I'm loving what I'm seeing so far. It's just great, except, come on, I wanted this to happen a week ago. Now it's interfering with the Santa Claus rally trades. So the ERSignals are working great, but it's smack dab at the time I'm supposed to be buying, and the strategy is buying and not doing well at the moment with the Santa Claus trades. The ERSignals, fantastic at the moment. Next, Spider. This is an ER1 trade on the way down as it got short during the day yesterday, SPY. And if you had the scalp version on, and we don't, we have the position trading ER1 version showing, you would have gotten out in the last 60 seconds of trading almost at the low of the day and had a fantastic day trade profit and a you're welcome Santa Claus present. Now we still have the trade on the books. It's still doing great. It actually was losing a little bit this morning, a couple of times, not much, but it got higher than where we got short yesterday. Now it looks like it's going to continue to work lower. In my opinion, I think so. I would love to see this drop off below yesterday's lows and close below yesterday's lows. And the bigger drop, the better. That means we'll get cheaper for our third and last long position for the Santa Claus system, if you want to call it that, rally history tomorrow morning. But we'll look at the Santa Claus rally in a minute. DIA. We rallied enough to get back into around the middle of the range of yesterday's, and it's not exactly the middle of the range, it's a mathematical formula, so it's different for different price levels, etc. And we're short a little higher than the opening and making a profitable trade at this point on the DIA. How far down are we going to go, Stan? We're going to go down to about 356.80, I think, at the very most, and frankly, that's an awful long ways down to go here in order to turn back up into the beginning of January and make money on the trades we're buying now. So I'm not liking the Santa Claus rally situation. If you actually took those trades, again, I repeat, and every time I tell people to get into a trade, I also tell them you're crazy if you don't use a protective stop, point blank. All right. Past performance is not an indicative of future results, and hypothetical returns have some inherent limitations. Your standard NFA disclaimer. Okay. DIA, ERSignal's doing great. Next, the Russell 2000 also had a bear. Every single one of them that I watch every day and show you every day had a bearish signal yesterday, without exception. I don't remember the last time that happened. So the implication, of course, is it's going to come down pretty good. I don't want that because of the Santa Claus situation, but I can't help it. Let's see what happens. We sold the rally this morning. We sold it short yesterday. It's just doing flat out great. QQQ. I can't help it. We're seeing the same thing exactly. My downside objective at a minimum is 390. In, I guess, the next week and a half at the most. There's a chance it could get back to support 383. But I'm talking 90 down to 383, I suppose. Next, NASDAQ futures, March futures contract. There's a gap to close at 16,490. That I think will get closed. That's not too far away, only in a few days. So very possibly we would come down to 15,940. Next, DIA on the 1 minute chart, very close to the low of the day. I again hope, I kind of expect today, maybe tomorrow, better chance, get below yesterday's lows and stay below yesterday's lows and start coming down some more. Now that hurts the Santa Claus rally situation. I would love to have seen this start to move up today and have a profit on yesterday's entry and maybe a profit on this morning's entry, and who knows about tomorrow. But that's not what's happening. And some years, this is exactly the same thing that happens. But by the first, second, and third trading day of January, it's profitable. So, you know, you want to buy low, sell high, last I heard. Next, QQQ. Sold short the rally this morning. This is the ER3. It sells 1, 2, 3 days after the original signal, which was again yesterday. I don't have the ER1 showing at the moment, but we would have gotten short right about there and gotten out probably on the close down there. Was great. Next. Oh, and I'll mention something else. For a decade plus, we've been monitoring stocks, for the most part, with the ERSignals. And normally we scan 13,000 stocks to find the criteria that we want. We come up with 5 to 10 on the average per day, symbols or instruments to apply the strategy to. That's on the average 5 or 10 signals a day, stocks. But yesterday we came up with 76 signals. That says something to how broadly the activity applied to individual stocks relative to the indexes yesterday. It was a whopper. The most I have ever had in one single day was December 26th of 2018, and that was about 400 in one day. Now, I can't say anything different here. I'm looking for lower levels. I think we're going to make new lows very soon. You're a little late to the party if you're selling short down here. That means you got less profit potential and larger risk potential. Next, the Russell 2000, 1 minute chart, ER3 new short sale right there, looking great. Near the low, bouncing a little at the moment. What about the March daily data chart on the futures contract? E-mini March futures, we rallied up to the middle, but it's not exactly, of yesterday's range. And that's pretty close to the high in almost every chart you're looking at. And now dropping off, we're bouncing slightly at the moment. Next, I'm going to show you the 1 minute chart on the E-mini. And this is the ER3 entry minute by minute. So it went up to and above, got short, relatively close, not that good, to the rally high. And now we've been making new lows since yesterday afternoon, late or evening. So obviously I want lower lows from the standpoint of the ERSignals trading, but it conflicts with the Santa Claus rally at this moment. Next, Spider Daily. We started out looking at these. I just love the way this is looking so far. Okay, let's go look at the Santa Claus rally specifically. I told you we're buying at 7:05 a.m. California time at the market, and there's our fill. And right now, I'm not liking it too much because this is where the market is currently. I'll drag it up to the current tick. And also the the Santa Claus rally number 2 trade was bought this morning at the opening of the 5-minute bar, and that's the price. So we have a loser on that one also. Now, yesterday on this recording, I told you I was going to put a stop at 475, give or take a tick or two, because I was concerned about the overbought conditions and the possibility of the reversal, which obviously has happened, past tense, about an hour after I talked about that stop. So from my personal disciplines, I didn't lose anything. And the hypothetical trades for the Santa Claus rally, I am flat. I want to get back in again. I will try to do so and scream bloody murder for you today or tomorrow. But today, I'm following the rules. I don't know if you want to or not, but the track record is great. If you want the information, info@ERSignals.com. So I'm going to be buying again the third and last time tomorrow morning at 7:05 a.m. California time. And then we'll be getting out 1, 2, 3 in the early first, second, and third trading days of January, or a trailing stop technique. Next chart is futures. And from a different perspective, we're looking at the E-mini continuation contract. Same signals you would expect, and we've got. I'm just tickle pink so far again. What about the NASDAQ? Same thing. Looking for a downside correction to support, and that would be 16,409 on this chart, the NASDAQ continuation chart. Next, bond futures continuation. These are all continuation contracts. They're not exactly the same price, but they move the same way as the overall or individual contracts move. We have the chance of a sell signal today in bonds. If it drops below yesterday's lows during today, before the close, and stays there, we'll have a red sell signal just like yesterday in the stock market indexes. Hey, maybe it'll happen, maybe it won't, but its setup is there. Don't jump the gun. 10-year notes. We're still long. We're going to lose some of our equity here if I do get that reversal, but I'm not. You see, I'm giving you opinion what I think might happen, but the strategy doesn't care. It just does what it does. And that's exactly why people use indicators and strategies, because they have exacting, unemotional rules. Next chart. And I'm expecting to turn back down. Next, crude. Rally may be over. Intermediate short-term trend is down. Longer-term, big sideways mess. Don't have a real strong opinion here, frankly, but leaning a little bit toward the downside at the moment. Natural gas, last few days, same price highs and lows almost exactly. We did get very oversold, and I think there's probably more rally to this because of the extreme oversold conditions we dug ourselves into. It may even come up to the resistance area of 3.068-ish. Next, heating oil. In resistance, starting to turn down. Yesterday's rally through the trend line did not close well, which is bearish. The line essentially stopped the rally. Also, the resistance area essentially stopped the rally, and we're down a little bit this morning again. So I'm voting for lower and a test of 2.475 and probably lower than that. Next, gold. We had that gigantic, along with silver, bearish engulfing on December 4th. And for the last couple of days, we've been stalling out at the resistance area, which is what I would expect and said I thought would happen. Now, I don't think we're going to see much more strength. I think the highs we've seen in the last few days are going to be it, and we're going to see lower lows very, very soon. Next, silver. Same kind of commentary, but we do have a new high today for this little rally out of an oversold and in support area. So I think it's going to stop rallying very soon and turn down again. But we're a little bit between a rock and a hard spot. My vote is basically bearish for a while. Next, platinum, same thing. Resistance is stopping it, and resistance. We don't really have a reversal today. It's a doji, but so far we've stalled out here in the last several days at almost the same price levels. Maybe a little friendly tinge to it because the bottoms are rising and the tops are also a hair higher, but certainly loss of momentum. I think it's turning around. I think it's about to hit the dust and start to slip back down. And again, maybe all the way to the support area down here at 829-ish. Next is high-grade copper. Resistance seems to be stopping it. It has a slight bit more elbow room to get up if it wants to the 3.95 area. But I think it's going to stop, if it isn't stopping now, any further significant rally and start to trend lower. Next, soybeans. We got the bottom of the market. It rallied for a few days, and now it's come down, and we're almost out of this trade. We'll have a little bit of a loss, it looks like. I didn't tighten up my trailing stop, which was something I could have done. It has a normal setting default, but users of the ERSignal's strategy are encouraged to change to what we call the kickers, which is the speed at which the trailing stop moves. And I didn't. I just left it default. So we might have a losing trade here. We had plenty of profit potential, but I just, want to show you what happens if you just use the defaults. Soybean oil is now starting to attack the last vestige of support here, which is 48.5, down to about 47.80. We're already in 49.30, so this could be a new low close for several weeks, maybe over a month, but it's right smack at that previous lowest close level. Looks like it's about to do it. Can't help it. This previous head and shoulder top worked great. We got short at the high on the second high. That double top was itself the head of the formation. And there's your first shoulder, the head, and then the last shoulder high was a bearish engulfing sell signal. I'm sorry, that was a bullish, wrong, incorrect on the shoulder high. And the sell signal that worked great, and we got short with ER3 and ER1, rode it all the way down until finally November 14th. And now the market's starting to work lower. I could have slowed down the yellow trailing stop and still be in this trade. But, are you a long-term investor type trader? Fine. Use longer-term type kickers with this strategy. The strength of the ERSignal strategy is the entries in particular. Next, meal. New lows, new low close, but there's such a broad area of support in a variety of places on the way down here. I think it's going to start chewing away and bouncing off of various levels, but I have to be bearish. Next, corn. Yesterday we had a new low and a new low close. We're bouncing slightly today. It got close to oversold, not quite. And I think it's going to continue to trend lower, bouncing back and forth on the way down. Next, wheat has done the same thing. For months and months, I've been saying corn would go the way of wheat, and wheat's going the way of itself. And it's going to do the same thing, bounce off resistance on rallies, start to challenge previous lows, make new lows for the trend until we see something else developing on a longer-term basis that's bullish. Next, live cattle. We got a great buy signal just in time a few days ago on December 15th. A nice little pop the next day, but now it's having a little trouble. That's not all that unusual. I wouldn't want it to get below yesterday's low because that was a bullish engulfing. And I kind of thought today was going to be an up day. So far, it's not. Let's see what happens here. Obviously, in bullish, we have our protective stop in place and looking for a rally, hopefully up to 182. Next, hogs at support. It could also rally a little bit here, but there's various resistance areas as it's starting to work its way up. So I can't be bullish, I'm neutral to friendly at the moment, but longer term bearish. Next, OJ, second day now, major downside breakout, absolutely textbook classic. The only thing that didn't follow a textbook, for instance, was this little bounce. You had a low, you could pivot point off of the neckline, and you had a rally. I drew this circle in a day or two before it happened, time-wise and price-wise. So I was short on my price objective. It didn't come up as high as I expected, and it turned around one day earlier. Not too bad, a day off and a little too high in price. But the concept of a head and shoulder top, last shoulder building did happen. Challenged the neckline the next day, didn't break out, bounced 2 days sideways a little, and then day before yesterday started to break out barely, not convincingly, on December 19th. Yesterday, no ifs, ands, or buts about it. 100% of yesterday's range below the neckline, opened lower, dropped more, closed at its lows, well below all previous levels of support short term, and breakout. Downside follow through today on a downside gap, no less. Gaps are almost always closed, so we'll be looking for a bounce soon, any day now, because we're oversold already, and we're touching support levels. So this would be a classic spot to bounce back up to here, 390, 354, to close the gap, and maybe a little higher, and then turn down into the red zone. We might get into this support area first and then close the gap and then new lows. My minimum downside objective is 287.30. We'll see what happens next. And by the way, we picked not only the top of the market here on the orange juice, period, but we also picked another one earlier that was a fantastic break for a few days afterwards. So far, these are two great sell signals. The last one, we're still short. We're riding it down, looking good. Cocoa. Not much to say, but bull market, not overbought. Might roll over a bit here. It looks like if you draw a line through the average prices, like a 2-day moving average or something, it's losing momentum a little bit. Can't be sure. Don't have a lot to say at the moment. Sorry. Next, coffee. Okay, bouncing off support. Not much to say here either. Not sure. And sugar to sweet keeps dropping like a rock. This is a RSI that is extremely low at 12 or 13. Markets rarely get down to those levels. The last time we were close to that level was back here on June 29th. And look what happened after June 29th. It went up a lot. Now, I am expecting a rally anytime, any moment, any minute in sugar, but the trend is now somewhat convincingly lower. And therefore, unlike back here when the trend was higher, this rally we're about to have in sugar may not go very far for very long. Next, cotton the rag, support area, probably going to bounce again. And back to the E-mini. Let's see what we got. Oh, it keeps sinking. I love this so far. Let's look at the short-term charts here. One quick second before we part. I know this has been a long recording. We have new lows for the morning and for the day so far, and the SPY, and pretty much everything across the board in the last few minutes. You have a profitable trading day. Talk to you tomorrow. Happy holidays to you.